Hey, what's going on? Jeremy back with another video this week. You get a chance to see me this week, so hello. Um, this is the pleasant voice that's been giving you these different insights to strategy and whatnot. Don't let the salt and pepper scare you off. It's not scared me off yet. So today is actually it's Saturday. It is May the 11th, and you might be wondering to yourself, well, why would we be doing a video on Saturday? He must be doing a projection for next week. No. I like to sometimes not as proof, but just kind of show that some people will talk in videos and say they do all these back testing and that's great. And one of the things that I like to do is basically forward testing, and just like I said in previous videos, like I like to go into the system and the trading plan that I use, the strategy that I utilize, and I kind of just like to test it in different markets. And I had mentioned previously, like sometimes I will on Fridays and Saturdays, I will go in because I know that crypto is still open and available. It's tradable. I will come in on Fridays and Saturdays, and sometimes on a Saturday, it's not a make or break, as you could see. And I think I moved myself perfectly. So you see, this is still a paper trade account, and I'm on Ethereum doing Ethereum, Ethereum, and basically Tether or USD. So this was basically uh, just a position that I took actually just this morning, and then I realized, I was gonna actually jump on my my sim rig and race a little bit, and then I'm having whatever's going on with frame rate and everything else, and I said, you know what, I'd really like to do a video. Want to do a video? Hey, why don't you just do this? So here we are. Um, I'll give you a little bit of my thought process behind this trade. I'm on a 5 minute. However, this time I didn't actually start on the 5 minute. I believe I went up to the hourly. Yeah, yeah. So I went up to the 1 hour time frame, and some of this may look weird. Like you might be wondering what in the world are you doing? What and how? All these lines and blah 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 blah. Blah. Okay, so just keeping the main thing the main thing. Okay, I want to say maybe I marked this out at some point. I don't remember. I honestly don't. But at whatever juncture, I essentially said this was going to be a liquidity low point, um, and this as well was also a liquidity low. This was basically my supply zone that was going to deliver. So essentially, I know from, excuse me, all the ads, man, but they got to pay the bill somehow. Okay, so once price basically made this low, I was looking at this saying, okay, if it taps the supply, it may mitigate deeper comeback. Well, it tapped the supply and then it came down and it cleared this liquidity point. So this actually I can probably just take off. That was a point of reference. However, now I'm actually at the point where I'm looking at the larger MB, if you will. Uh, Market break is what, when I say MB, I'm talking about a market break, which is here. Okay. And I'll show that to you with my handy dandy fib here. This I used as the overall market break short. Now, one of the things that I understand is this break can do exactly what this did. I have this entire supply zone marked out. It tapped in and it ran away. So, understanding the risk here, there is there is a risk. Okay, I will just say that right off the top. Additionally, I'm looking again at the institutional delivery, which tells me that at whatever, whomever the operator, composite or otherwise, whomever that is, felt like there was enough transfer or enough closure of orders or enough transfer of orders long to then introduce the essentially the bullish becoming the weak hand or the weak to strong that allowed the delivery to clear this low, that made this market break. if you will. Okay. So for me, I looked at it and I said, okay, well, institutional is basically put in this intermediary low, and it is an intermediary low, with the potential, no guarantee, the potential of closing a few more of these orders or continuing that weak to strong hand delivery, meaning you're forcing the market in a given direction to create the liquidity that's going to allow you to continue the move in the direction that you want to move in. So in this particular case, the move that they apparently want to continue to go into is short. However, you're not going to be able to move the market from up here all the way back down into here in just the blink of an eye. They could do that, but then you deliberately show your hand. And why would you want to do that when they're only, a certain segment, or there's a certain portion of composite operators that are going to know what the true move is, that are going to be able to manipulate and get in and out of positions while making money and making orders make sense for them long term. The retail traders such as you and I, not really supposed to know all of that. So we're only supposed to make it in areas and spots. Their objective is to make it everywhere they can, and even in the instances where they lose, there is a pool. And the reason I do this is, you've heard the expression liquidity pool. There's a pool that's available to them, so when they find themselves in negative positions, there are those specific areas, or those areas, the areas of price, or the interesting price points in which you get into the order books and all of those things. Like, all of that becomes, it's interrelated. But once you understand, instead of like the intricacy of that, once you understand that there are times where if you see the market move quickly away from one area, I'm not going to say that in every scenario you need to look at where that price movement was from, but I will say that it will give you an idea, if not some level of footprint, to know there's a reason it moved from that place, and there's potentially a liquidity pool that rests or resides there, or that is truly an area of interest that you might want to watch how price moves, how price mitigates in those areas, to develop, to understand what the footprint or the next move by the composite operators are. So hope you followed that, and if you didn't, just watch that segment, watch the segment back, and it should make sense. And then if it doesn't, leave a comment below, and I'm happy to discuss any and all things trading at any time. It's just it's good. It is good. It is very good. Okay, so this was basically the break short or low, and what I said was, okay, I marked out a 50, and I said, okay, well, there's a possibility, fairly decent probability, for price to come back into this area, just looking at a 50. So what I did is I looked at where it created essentially this intermediary low, and I said, okay, I'm on an hour. Let me see what that looks like lower. Okay, what's price doing? I know what it'd be doing on the 30 is essentially the same thing as the 1 hour. So I just dropped all the way down to the 5 minute, and I said, okay, what's price doing here? One, and two, what does the market structure look like? What is it showing me from a structural standpoint? What's the market showing me? So I looked in, and I said, and I think at the time that I took this morning, I don't know if you could see that very well. I'm going to try to make this big so you could see. That's probably it. I need to, I've got like really good eyesight, and sometimes I take for granted that if I have to start doing videos, I have to be respectful of everybody else's eyes. It's like their eyes are not like yours. All right, so I looked at this low, put in, and then immediately I'm looking for highs, potential highs being run, right? Or swing highs that are being run. So when this low gets put in, I can look back and say, okay, this came from right in here, and I'll just, draw out this box so you can see what I'm looking at, and just kind of give you an idea and insight into what I'm looking at again. So I'm going to pull this across, and I'm going to stop right where the low is, which is right here. Okay, so this low gets put in, but it gets put in from here. That's, you can call it a pullback. That's a decent enough pullback after this move lower. That basically creates this move down. And if you need verification of that, I'm just going to grab this and I'm going to continue to pull this on over. And if you can see, you've got one here. And even though it doesn't deliver lower, it's not the point yet. Not the point yet. But it shows the high. What I want to show you is basically the high, that pullback that sets into motion the last buy to sell. So in this instance, this move here, just to this point, right? Just to this point, this is the last buy to sell that ultimately creates the delivery short to make this low. Okay? So with that, I could say, okay, that's a high to look out for. Because again, I'm looking for potential bullishness back into that supply zone that we had to tap in and price ran. Okay, not a guarantee, but I'm just looking. Again, it's Saturday. I'm fooling around on my paper trade account, and I'm validating, further validation of what my trade plan is, which could or could not pan out in this crypto market, but we're gonna try. Right? So come all the way across. The zone's held up to this point. Okay, no delivery there. But remember what I said, the low. I'm looking for the highs to be cleared. I'm looking for liquidity to be taken. Okay, so the liquidity doesn't get taken until here. Right? Use a little arrow. Don't kill me. I'm trying to make sure that's even. Pull that across right there. Okay, so here's where this is broken. Now, there are a couple of schools of thought when you have basically a supply or a demand zone that's violated or invalidated with, say, a wick or even a body in some cases. There are different methodologies, a couple of which I actually ascribe to when the institutional order flow shows that something else is happening, right? The delivery of price and a supply or demand or a zone that you've marked out or an area of interest doesn't hold for a particular reason. There's usually something, there's a greater level of context around why. Okay, this is one of those situations where I would say there's a higher level of institutional order flow where I wouldn't expect for this to hold. And I know you could say hindsight, you're telling us this now, it couldn't have looked like that, you're doing it now. But one thing that I didn't just do, which you could see, which is why I did it, is this order's already been triggered from this level. Okay, already been in some level of drawdown. Yeah, and this is basically where I put my stop at a level of a protected low, which I could have probably made tighter, but I didn't. But I digress. Okay, so this is basically the level where price has been violated or the supply zone is no longer valid. It becomes invalidated. It runs away. Okay, so again, still the same zone, but now because of what I'm looking for bullish motion. I'm looking for bullish momentum to get again back into that higher area of supply. And I will stop right here and I will say what I've said in previous videos. There is no guarantee, or there is no extra confirmed probability that says that price absolutely has to get back there, because it doesn't. Okay, there is expectation, there is bias, and then there's what is more probabilistic versus what just isn't. Okay, so what I'm erring on is the side that says, hey, it's possible, it's probable, may or may not. Okay, so this is where price gets violated, it breaks up. Okay, so what I look at is I would say, okay, where did this really come from? Okay, because you've got a lot of price action in here. You got a lot. I'm trying to make this bigger so you could see it just that much better. Right, and let's open it up. Okay, cool. I'm trying to keep myself out of, oh, beautiful. I forgot, green screen, you got candles. I got candles behind me. That's cool. I got candles. Yeah, I like that. I like it a lot. All right. All right. don't, don't mind me. All right. So you've got a wick again, which in some places is a absorption criteria. There's a small pullback and then the push through. So this is where price is broken. But the question is, where did it come from? Right? So as we go back and we look at where were these pushes, right? Where were the pushes from this low? So you had this one push back up, failure to run this low. So you say, okay, that's one. This is one, but it's not definitive. Like you don't have any basis to say, okay, it didn't run this low, so price is bullish. That you don't have that. However, what you do have is a couple of other scenarios where you say, okay, this very well could have tapped this 50, right? And let's look because I don't mind going back and verifying that. So there's that zone. This would be the 50. I would say, yeah, if I was looking at this S&D and I took the latter half of this 50, I would say, yep, that tapped the 50. Does it deliver? It does not. Okay, now it comes back up. That might be 75. Okay, still not. But what I have to recognize and what I'm looking at is to say, okay, well, I had this low and now I've got an intermediary bullish break long here, right? So I can still keep this intact, and then we already know that this was the violation of the supply zone. So I've got two schools of thought going because now I'm thinking in two different. I'm thinking in terms of bullish momentum for further mitigation to continue short, but now I'm also thinking intermediary bullish action to just mitigate, right? I'm not looking at bullish to go all the way to the supply. I'm not looking at that. I'm looking at is there structure that's being put in? Is there institutional structure being put in to where I can look and say safely, okay, this is now a protected low. Price is mitigating long. It's going to come back and mitigate again. It's going to create a weak to strong hand kind of transfer. And is it going to continue, or is it going to get to a point where it just mitigates to continue the overall institutional structure short? Okay, so like I said, this one move long has nothing to do because in my mind, it's just really tapped into this supply. It's not really showing me that it's going to invalidate this short, right? So this first move here, which now you have a bullish break with this high created off of this, still doesn't really tell me. It doesn't really tell me that you're wanting to go long. However, the way I process, the way I view structure is I would look at two things. I'm looking at this move here, okay? Because again, this is the second. This is one. Anytime I see a move back into supply like this, I'm looking, if I'm looking based on my trading plan, I'm looking for shorts. Sorry, guys. I'm looking for shorts. I'm not looking to invalidate the zone that I'm seeking to trade in. That's just not how I operate. I'm not gonna say, oh, let me take the short, but I know it's gonna invalidate because price is gonna run away from me. I don't process that way. I will look at a zone that taps or price that taps in. It begins to run, but I will attempt to say, okay, well, let me look at what the overall structure, institutional structure, is showing me. If the overall says that it might be run, guess what I'm going to do? I've already managed my risk, so if I've entered the trade via limit order, I'm gonna take my loss because I know that I've mitigated as much, or I'm only risking a certain percentage that I'm okay with losing. So I'm okay with allowing the trade to run, even if it's a loss, because then it's going to show me what the overall institutional delivery is. I might have missed it. Totally possible. Happens all the time. So I would be mindful of this as a bullish move beyond, but now I would also be looking at, well, where's the top of my overall supply area? Because once I see this get run, guess what I'm now doing with this? I'm now going to turn this into my market break long, my market break bullish, because a lot of what's happening in here is just interterm liquidity being created to make this move, to make this break. So I'm not looking at, counting back the last 5 candles. I'm looking at the overall structure, even on a 5 minute. I've got quite a bit of information in here based on that 1 hour that would tell me I can probably just do this. I could pull this all the way across and say, if this is truly going to be bullish, then the likelihood is after this was the first, but this is truly the second break above, I might feel like the move can be withheld within this demand zone if it wants to hold. My protection is going to be at this low. Why? Because there's still the ability for price to come back, mitigate deeper if it's still trying to accumulate more orders to get back into that supply. So the objective here is not to catch the one move that we can shoot to the moon back to that supply. I'm willing to say I'll take an intermediary position if the context of the institutional delivery is sound enough for me to feel comfortable taking it. Okay, and this kind of goes back, and I'm sliding over so you can see again still what I'm looking at. Am I okay? Yeah, it'll still show up. My head's not in the way. You'll still be able to see that. Yeah, this is a pretty big stretch away from this, and that's what I was saying earlier when I said I probably could have made my stop smaller, but I'm gonna protect myself, and the reason I'm protecting myself is that's my low. High, this is another low, that's a market break high. And I'm going to show you something here real quick. This is one of the ways that I use my fib. Other people use their fibs differently. Pull this down just a little bit right here. There we go. So And again, you're going to say hindsight being what it is, whatever. That's fine. That's fine. And I'm okay with that. All right. I'm okay with that. I will just say that if I took the lower half of this area, which is part of how I trade, just to give you, again, an idea. I'll remove that. Let me change this color just so you can see the difference in the, do it that way. Okay, so this would be from here. That way I would know where I was coming from. So again, this would be the lower 50% of that market break for me. So this would have been basically an invalidation, and just based on this move, it truly would be an invalidation point for me, because then again, price can come all the way back here and still mitigate long. The point that I was making to you is sometimes you could look at how structure is being delivered. You could look at the last supply and say, it's going to tap in, it's going to run, it's going to, run this low, I'm going to be profitable. A lot of times you need to step back and look at what I say over and over and over. It's boring as hell, I know, but it's beautiful when you hear it and then you understand it and you see it. But when you look at how the overall delivery of structure is shown to you from an institutional standpoint, you're okay with being wrong, especially if you're shown in basically being liquidated, being taken out of a position. You're being shown, okay, the delivery you were thinking that was going to occur, the bias that you had already put in place, not necessarily so. This, it's almost like taking a test and getting the answer wrong. But instead of just, having another test put right back in front of you to say, hey, okay, take it again, it's almost like your answer, you're being checked and given substance at the same time. You're being checked by the trade telling you, hey, you were wrong in your analysis. Your overall bias might be right, but the specific trade criteria that you entered on, that particular bias was incorrect. But if you just keep watching, we'll potentially show you what maybe should have happened, or maybe something that you didn't see before. Now we're going to show it to you by invalidating your trade idea. And if you wait long enough, we're going to potentially show you where we're going. Does that make sense? So a lot of times, that's why I say I'm okay with, situations like this where I can come in and check and test my trade plan on a day where I can do it in a paper trade account. And yeah, I have to happen to like Ethereum. I've traded it a couple times on my Funded Trading Plus account, because their accounts, you're allowed to basically trade. You could trade 7 days a week if you want to. Crypto on the weekends, there's no. It's not like an FTMO, where you have to stick to like a Sunday through Friday. So if I wanted to go into my Funded Trading Plus, I call it FTP. If I wanted to go into my Funded Trading Plus account and I wanted to trade this live, I could. A lot of times, I just feel like I don't do a whole lot of crypto. I do it every once in a while, but the point I'm making is it kind of gives and breathes additional life and also additional refinement into my particular trade plan, what I look at, how I see things, what price shows me. But again, it kind of goes back into that idea that I was just speaking of, which is if I'm wrong, I'm okay with being wrong. I'm just gonna say, okay, well, I thought this, but it was that. Okay, so what's happening, right? So in this particular instance, I looked at where price was. I've zoomed out. Yeah, you should be able. That should still be good for you to see. So I've zoomed out, and again, I will always say, and I'll be the first to say, just because you see this amount of movement that doesn't look like there was a whole lot of participants does not mean that price is going to come all the way back up into here to deliver short again. However, however, if you were just looking at what could be a contextual bias based on how price is mitigating, a lot of this my mentor would more or less call fluff. If when you're looking at it from a higher time frame context, because again, we're looking at time frames to see how price is delivered. We're not looking for time frames for the sake of time. Okay, so he may look and say, and that's how I was taught. My mentor basically said, hey, a lot of this is fluff, and if you don't know what you're doing, stay out. And he's 100% correct, because we don't know. At the end of the day, we don't. But if the bias and the context makes sense, and here I would look at this and say, okay, low, this wick cleared these highs. We can go back in. I could zoom in and show it to you instead of you not really being able to see it. Right here, can you? Okay, so here, this wick cleared. I'm pointing at the screen like you can see what I'm pointing at. This wick here cleared this high. It cleared it. Okay, so when we were looking at this larger zone to mitigate, but as price came down, you're looking for highs to be cleared. So despite the fact that this is within this zone, okay, that high cleared makes sense. Comes down, this now clears this high, but in the process of that, it's now cleared these highs back here. Okay, price comes down, 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 down. Now this violates the entire supply zone. Okay, so that's one, that's two, that's three. Okay, and within three, this isn't really a pullback, but price just comes up here and says, hey, I'm up here now. So I can look at this overall, which is why I have this drawn out here, this overall zone, but I also have this first zone drawn out to say, if for some reason this overlap, price could come tap into this overlap area and continue to push long. I've already set my intermediary price movement bias just based on this. And again, it's a intermediary price delivery bias. Doesn't have to be correct. So honestly, if I was smart, if I was really smart, and because I could afford to just kind of fool around in here because it's a paper trade account, but also to learn and to teach myself a lesson. Not a lesson in what not to do, but just a lesson in terms of, hey, it's a crypto market. Let's just see how it delivers. I would probably set this as that would be my TP. And you might say, well, Jeremy, why would you make that your TP? Why would that be your TP? Because remember what I said a minute ago. I basically have my take profit all the way up here. There's nothing that says price has to invalidate anything in this area. And if you look at what's going on over here, a lot of people would look at this and go, huh, well, let me see. I'm just going to draw this box and I'm going to pull this all the way over. And guess what that now just became as soon as they did that? This is now resistance for them. For those that look at resistance, or they would say, well, that's a support. That's a support. I'm looking for price to get all the way back up there and then it's going to short. Well, it could. It could very well do that, right? Or not. Or it could reach all the way up here. Or not. Or I could just target this high, right? And get out. Or I can target this high. If price runs that high, I could take 50% off and I can move my stop to break even. So that way I can be out completely. And then the third option to pick up on that last one could be I could wait for this high to be taken. I could take my 50% profit off. I can move this to break even. And then even if I get stopped out, guess what I still have potentially? I still have the potential of this area here, this last area of demand, if you will, which is still relative to this first break long. That would tell me that if there's some kind of mitigation in here, now it's a different type of weak to strong. Now it's going to be a bearish weak to bullish strong hand transfer that could potentially run back and take out this resistance, this support, this supply to tap back in up here. So I could still look for another potential bullish trade from this area should this high be taken and price reverse. So you see what I'm saying? So there are a lot of different scenarios to play with, but the main focus of this video, which is now running up on about 35 minutes long, so I hope you guys have enjoyed it. I've definitely enjoyed doing it. The main idea behind showing this and sharing this is that I think a lot of times people get hung up on trade bias and plans and you should be bullish and when the market is bearish. I'm a firm believer that if a market is showing you that it's bullish or bearish, believe it. If you have the context under which it's delivering in that fashion, there's really no reason to go against it. However, in the instances where your trading plan, your rules, your bias, and an overall understanding of what the institutional delivery is, if it seems like it's a counter trend trade against the overall bias of the market, but it makes sense institutionally, it makes sense, you could take it. Just understand that it doesn't necessarily have to deliver to your expected target or to your expected area or to your expected level. Like, it doesn't have to. So just something to be mindful of, something to think about. I may, depending on how the rest of the day goes, I'm debating whether or not I'm actually gonna go into my OBS to see what's going on in terms of my gaming and streaming. But one thing that I had been thinking about doing this week that I could still do today and actually do tonight, which would probably be pretty good. I'd have to find a couple of crypto markets to get into to do that with, is to actually just kind of do a live stream, just be on and I don't know, find some music that's not gonna, I'm not monetized right now, but I don't really want a YouTube strike. I've been doing good with that. Find some background music and something to just kind of sit here and piddle away at the markets, because honestly, it's something that I enjoy to do. A lot of people look at it as stressful. It's not 100%. It's not always right, but I feel like when you come in with the right kind of mindset and you have the proper type of expectation, and that should not be get rich quick. I'm gonna make 10% in the next two trades, and I'm gonna quit my job, and I'm going out to buy that big house and the Lambo and all. Like, if you set the proper expectation, I feel like it does get difficult. Sometimes, you're gonna have those days. I've had those days where you just kind of shake your head and go, like, what the hell am I doing? But it's a constant reminder, if you come back to the core foundation of why you found yourself studying markets, understanding financial data, you know, the pip talk, whatever you want to call it. When you get back to the fundamental idea of why you're doing it, the question I always asked myself was, do you enjoy it? Is it enjoyable? Forget for whatever the time frame is. I say, forget for a minute about wins and losses. Forget about money. Forget about the money aspect. Do you enjoy it? And the answer for me has always been yes. It's something. It is intriguing beyond belief for me to be able to come and sit down and technically look at a market and say, this is what I think based on context, institutional structure, and my personal trade bias. Not think from an emotional standpoint of just, oh, it's going. No. Everything backed in technicals. And then I might listen to what the sentiment is or what the fundamental is, but not have that change my technical bias. And I'll just say, for the last two NFPs, just dealing with technicals and just understanding the context in which the information surrounding the dollar, surrounding the U.S. market, surrounding oil, surrounding consumer spending, understanding what that fundamental, that sentimental talk is. I've just maintained my technicals to say, well, if you guys are saying all of these things that are not overly good, then you're looking to make a correction somewhere, or you're looking to make that motive move based upon the preponderance of how price has been setting up in certain places. So February and March NFP been really good to me. I'll say that, and I'll leave it there. But yeah, if you're passionate, that's great. But passion isn't something that's going to sustain you long term. If you're passionate about this and you truly enjoy the journey, you embrace it, and you love it for what it does for you, it's enjoyable for you to come sit down at the chart. You'll never lose a true desire to want to succeed, want to learn, and get better. All right. So that's enough of my philosophizing today. I hope you enjoyed the video. Give it a thumbs up, give it a like, subscribe to the channel if you do, and I'll be back with another video soon. Take care.